Hello friends, welcome to another video on technical trading. So in this video, we are going to see how we can trade a gap down or a gap up market. So for this case, I'm using crude oil as example because we could see there was a big gap down opening, and how we can trade, or how we can find out the levels with the basic analysis that we can do. Okay. So the analysis this analysis does not require any sophisticated tool or sophisticated technique or some kind of special software that will provide some levels. Okay, you can use the basic information that you have to do the analysis. Okay, so let's go through the analysis. Okay. Okay, so this was the market opening. The market has opened gap down, and there was this strong, or it was a gap down, and there was this big range forming, right? So what I can do, I will simply make a range or make a channel. Okay. So this is the range for me from the opening. Market has made this low, and there was some buying activity going on. So we are near the high of the range. Okay, near the top of the range. So, and from the previous day movement, what we can see, there was this swing low, right? So let me draw. There was this swing low, and there was this swing lower high, and we had this another lower low. So it was a market has closed at this point, and sorry, at this point, and there was this swing a gap down, right? So we had this movement, a three-leg movement. So this high is very important for us because this is the swing lower high, right? And once the market has broken out of this area, so if the market is trending down, it needs to form a lower low and lower high, right? And if the market is trending up, it needs to form a higher high followed by lower lows. So that is the basic structure. That is the basic structure that the market forms when it is in a trending market, or the instrument is in trending market. So this is the important level for us. So what we can do is I'll take few cents above that. So this is the important line for me. So what I can do is I will mark this one as in red. Well, that is a potential breakout area for me. So if I get a signal at this area, a buy setup at this area, I'll take the trade, because that is likely to go up, because that is a breakout and it can form a flat correction as well. So we'll see if we are going to get a breakout above this area or not. Okay. And say if we are getting a breakout, so my target, say if I was involved in this gap down, okay, and this was my, if I have, this was a movement down, so what I can do, because I can simply project the length of this channel to the upside, right? So we have this level as a target for us, right? So that is a big level. If you're a day trader, the level is around 52.77, 54.15. Okay, so almost more than 130 pips. So that is a big level, but you can book your targets near the high as well, this high area as well. Okay. And say if the market is falling down, then what we can do is we can join this, draw this middle line. So this is an important level for me. There will be some acknowledgement, some intraday movements happening at this area. So this is an important line for me. So what I can do, I'll draw it in say yellow. Yellow. Right. And this one is, I'll draw it in green, because that will be a projected target area if I get a breakout. For the breakdown, what we can do, we can simply project the length of this channel to the downside. And given that if we get a buy signal at this area, it can form a double bottom, right? Double bottom, and we may get some pullbacks to this retest of the middle line. So that you have to be very cautious at this area, because if you get a double bottom formation and we get a buy signal, then there can be some retracement to this area, right? So you have to be very cautious at this area. So for the breakdown, what you can do, you can simply project the length on the channel to the downside. So that I'll mark as a, say, this color. Okay, so I've got my levels for the intraday movements, and we'll see how we are going to uh, take the trades. And most importantly, this analysis should always be combined with some kind of with some setup or some strategy that will give the entries to the trade, right? You can never trade based on the analysis alone. You should never trade based on the analysis alone. You should always combine the analysis with some kind of setup or signal that you get a buy or a sell signal. So say I have a strategy of moving of average crossover, or say a candlestick pattern that gives me a 70 or 80% of success rate, or even say 60%. Okay, but that, if you combine with this analysis, the probability of making a good trades with good risk reward ratio is very high, because if in this case you will take the SL as the swing low or swing high of this area, right? So that in that case your SL will be very small, and the target will be quite double for that. So you will have a good risk reward ratio as well. And so you have to combine all these things. You cannot take, or you cannot trade based on the analysis alone, right? So that is the most important thing that I follow. I always combine my analysis with my strategy, and see whether if I get a signal, and based on the signal I'll take the trade. A signal can be anything. It can be a setup, it can be a strategy, it can be a candlestick pattern for you, it can be a breakout area. Anything that you find that is happening very often, and you make a trade, and if you take a trade, you are getting good success rate. So that is a strategy for you, that is an entry setup for you. Okay, so you should always combine your strategy with the setup, with the um, as I said. Okay, so let's see how it is going to work out. And hope you have liked the video. So if you have any strategy, if you have any suggestions, or if you have any comments, if you have any question, you can simply ask me in the comment section, and I'll get back to you. Okay, thank you. Happy trading. Have a good day, and bye.